every transaction scrutinized, and your financial privacy becomes a thing of the past. Sounds like a dystopian nightmare, right? Well, it might be closer to reality than you think. Central bank digital currencies are coming, and they're about to change everything we know about money. Welcome to the Economy Unpacked Daily YouTube channel. From Wall Street to your street, we share the world of money in a clear way. No, CBDCs are something entirely different. Digital versions of national currencies created and controlled by central banks themselves. And they're not just a far-off concept. Dozens of countries are already running pilot programs or having serious policy discussions about implementing CBDC. Let's unpack this complex issue. First, let's get clear on what CBDCs actually are. Unlike decentralized cryptocurrencies or privately issued stablecoins, CBDCs are fully backed and controlled by governments. Some real-world examples are already in play. China's e-CNY is in large-scale trials. The European Central Bank is developing a digital euro. And even the United States is exploring the concept, though debates are still ongoing. First, there's efficiency. Digital currencies can dramatically reduce transaction costs, make cross-border payments smoother, and reduce reliance on outdated payment systems. Second, CBDCs give central banks more direct control over monetary policy. With private cryptocurrencies and stablecoins gaining traction, governments want to ensure they retain control over money. And let's not forget about financial inclusion. Millions of people around the world remain unbanked or underbanked, and CBDCs could offer them secure, low-cost access to digital finance. Payments could become faster, cheaper, and more reliable. As physical cash use continues to decline, CBDCs provide a secure digital alternative. The increased transparency could help fight fraud, money laundering, and tax evasion. And for citizens without bank accounts, CBDCs linked to mobile wallets could be a game changer in terms of financial access. Critics argue that CBDCs could give governments unprecedented insight into every single transaction we make, the anonymity we currently enjoy with cash transactions. That could become a thing of the past. And in the hands of authoritarian regimes, CBDCs could become a powerful tool for control, allowing governments to freeze assets or restrict spending at will. The United States, for instance, is taking a cautious stance. The debate there is heavily focused on privacy and individual liberty, with many policymakers expressing fears about potential government overreach. The United Kingdom is exploring what they're calling Bitcoin, but they're heavily involving public consultation to address trust concerns. And then there's China, which is moving full steam ahead with its e-CNY. But CBDCs aren't without major risks and challenges. Cybersecurity is a huge concern. If digital systems are hacked, it could undermine trust in national currencies. There's also the potential for major disruption to the banking sector, weakening their traditional role in the economy. Public backlash is another potential hurdle, especially in democracies where concerns over surveillance could spark significant resistance. And there's the risk of too much power being concentrated in the hands of central banks, potentially reducing economic diversity and resilience. So what does all this mean for you and me? Our everyday transactions could become faster and cheaper. We might end up holding accounts directly with central banks instead of commercial banks. Even those without traditional bank accounts could have digital wallets linked to national currencies. But it also means we'll need to become more savvy about protecting our financial data. Will transactions remain anonymous? What safeguards will be in place to prevent abuse? As we wrap up, it's clear that CBDCs are likely coming, whether we're ready or not. but the choices made in their design will determine whether they become empowering tools for financial inclusion and efficiency, or instruments of surveillance and control. Question our policymakers and actively participate in public consultations about CBDCs. The future of money is being shaped right now, and our voices need to be part of that conversation. So, we want to hear from you. Would you trust a CBDC in your country? Why or why not? Let us know in the comments. And do UNT forget to subscribe for more deep dives into the future of money. Until next time, this is Economy Unpacked Daily, helping you navigate the complex world of finance, one video at a time.